All eyes on China, growth of 10.7% for the fourth quarter of last year. So slightly below expectations, but for the yearly growth, 8.7%. And we kind of expected that China would be experiencing double-digit growth, given that they pumped trillions of yuan into the market as stimulus.
Not only did they pump that amount, they also persuaded institutions to lend when compared to Europe and America, where money has been pumped in, but banks continue to lend very reluctantly. And China remains an engine of global growth, and therefore we're expecting China and other emerging markets such as Brazil to be really the anchors for growth in the global economy going forward.
Are you concerned that we'll be seeing a little bit of tightening in monetary policy in China? Do you think it's going to be a good thing? Because they are talking about trying to avoid bubbles, especially in the property market.
I think we need to see that tightening. However, what's important for us, particularly in South Africa, is the continued strengthening of commodities, meaning that, the economies, particularly those at the commodity exporting, will continue to grow, albeit at lower levels, because we need a much more broader growth globally, but not only China, with the challenges that the global economy faces at the moment of high unemployment and uncertainty as whether the tightening will lead to other consequences, such as general collapse, because in Europe and America, we don't know what the impact, if they follow China in the second quarter, or what impact that will be on global growth.
I think it's being prudent if they do pull back on some of the stimulus that they've been putting into the market, and also those interest rates. The interest rate environment in China also relatively low. Inflation might be becoming an issue. I mean, we look at those UK numbers, which came out earlier this week, and inflation ticked up to around 2.7% for December. I think it was from about 1.9%. So really just proving that inflation might be becoming an issue, not only in the emerging markets, but also in the developed world.
Well, I mean, the inflation story really will be a function of when the stimulus is removed. What happens then to manufacturing? At the moment, we think that inflation globally shouldn't be an issue. However, in emerging markets, countries like China, South Africa, and many others, it's going to be a problem. But in global terms, for mature economies, I think there's still a lot of uncertainty, and we still have to watch and see what happens when stimulus is removed.
Focusing on South Africa, retail sales also really disappointing the markets yesterday for November, contracting by 6.6% from a revised figure of 6.1% in October. So really just proving that the South African consumer is under pressure. I mean, markets had expected a contraction of 5%, so really coming way below expectations. Lumkile, where do you see the South African consumer going from here? Because clearly no one's spending, everyone is deleveraging at this stage.
Well, in fact, I mean, we know that we've got high levels of household debt to GDP, around 71%. But more importantly, we've lost almost 1 million jobs. So there's not much money going out there. And therefore, the fact that consumers didn't go and spend indicates how hard and tough it is, how leveraged they are. But more importantly, it shows also that in South African recovery, it's really not going to be very sustainable unless we see some tight action and some support for businesses so that we can be able to stem the tide.
Speaking of action and support for businesses, when we look at the likes of Eskom trying to impose a 35% tariff increase for the next 3 years every year. So clearly that would be a big blow to business and a big blow to the consumer. We've got public hearings underway at this stage, and a lot of talk of the public sector entering Eskom as well and buying up some of its power stations or divisions of its power stations. Do you think that's a good idea?
Well, we've always argued that, that time is over. We need decision around that issue, particularly making sure that the private sector comes to the party, not only through Eskom buying equity, because we've seen that when the private sector buys into a parastatal, the prices go up. We've seen on telecom that was the case. So what we need to see is to see the Mababulas and other private sector power producers coming in, and the national regulators making sure that the tariff is attractive for them to come in. So government must deregulate than continue making a monopoly and introduce a private equity partner, because we think that that's not sustainable in the long term on tariff side, because they'll be very expensive. That's why we want the competition to come into that sector.
Well, the thinking is that the private sector doesn't really want to work with the likes of Eskom, because they're just very concerned about the way that Eskom has been managed over the last few years, and also concerned about the profits and whether it's going to be coming in at the right price. What should Eskom do to try and lure in the private sector?
Well, Eskom has got very little option, really. They've got a stock that they've got. That's why I wanted government, earlier on when the crisis started, to introduce private sector, because Mambabula, as I said, is at a much more advanced stage. There's a lot of other projects in Mozambique, Mpandankua, and many more. So therefore, if the state had to deregulate that market and also allow co-generation, because a lot of the companies in South Africa are able to co-generate, but however, the tariff becomes a disincentive. Therefore, the regulator needs to also come to the party and work with the state to make sure that market is competitive, because in reality, for South African consumers and companies, the days of cheap electricity are gone.
Consumer under pressure. We know that we might be getting an Eskom tariff increase. Inflation is still relatively sticky. We've got the MPC meeting next week. Do you think that they should be cutting interest rates? Some of the analysts I spoke to say that they should be cutting interest rates by 50 basis points. It'll help, it'll be more of a psychological effect rather than an actual physical effect on inflation and the consumer. Yeah,
there's no time to cut interest rate. We've got to tighten the belt. We've got also to be bold in decision making, because South Africa is very slow. We keep on doing studies, we keep on looking at options. We need to make decisions, take the risk, and take the consequences. So for me, trying any stimulus, such as the Reserve Bank stimulus, I don't think at the moment is warranted, and therefore I see the Reserve Bank keeping the rate steady and waiting to see what happens post the World Cup. I think a lot of activity. Once we know how deep in trouble this economy is, I think we'll see some stimulus coming in, but I don't think from the Central Bank. It has to come elsewhere by bringing competition in sectors where we know that the state can't afford. The state has got too many priorities. They need to focus on education. They need to focus on the health sector for the poor and make sure that people get clean water.